You are not a trader, and I want to get this into your mind as quickly as possible. So, a lot of people that come into this business, come into this space, think of themselves as some day trader, right? Some master Wall Street, hedge fund, retail, animal type of trader. You are a risk manager, is what you are. And a lot of you, including myself at one point in time, were horrible risk managers, okay? So if you want to be a good trader, you have to master the ability to be a phenomenal risk manager. And what that means is you can't take every single trade. I'm going to give you a couple of examples right now in a minute. But you can't take every single trade, even if the stars align with your trading strategy or your edge. Now, again, everyone's different, but in the beginning, you cannot take every single trade because every single trade is not going to match up with what your defined risk level should be. Now, again, as your trading account starts to grow, as you become more profitable, as you add more tools to the belt, meaning tools being different types of setups, different types of size, different type of leverage, depending on the time of day, depending on the setup, depending on the risk, that will come. But in the beginning, you need to really focus on, if you're trading a prop firm, getting funded. You need to focus on getting those payouts, getting even with all of the money that you've lost. Now, some of you may be thinking, well, I'm down 40, 50, 60, $70,000 since COVID or this, that, and the other. I don't know if I can get it all back. You can get it back if you start practicing good risk management. Now, again, focus on becoming a phenomenal risk manager. And I'm going to give you an example right here. What we're looking at is the NQ futures. We're going to be looking at a couple of setups based on my particular strategy. Now, again, I don't like to take any setups the first 5, 10, even 15 minutes of the market open because I like to let the market digest. So sometimes I'll kind of let those setups go. There'll be other times where I'm feeling a little bit more risk adventurous, I guess, and I will take those setups. Normally they do bite me in the ass if I don't take my profits very quickly. But I want to go through each and every single one of them, right? I do not want to just highlight the winners because, again, you may come across videos, you may come across channels or trading influencers or educators that only show you the wins. They only show you the winning setups. That's completely false. My setup, my strategy will win maybe about 60% of the time. It's up to us to manage the other 40% so that we not only break even, but break into profitability. Now, you can break into profitability if you're a phenomenal risk manager, and most of you are not. That's why I created Evolution Traders. Not only just created a course, because it's much more than a course teaching you a strategy. It's a mentorship. It's a community. It's a place where you can ask questions in real time. It's a place where you can go onto my live calendar, book a one-on-one coaching call, and we can go over trades in real time. We can go over some of the trading problems that you may have. That link is down in the description box below. I only have one space left. What I want to show you here is that the reason why you can't take every setup, even if it's aligning with your goals or with your setup and your edge, is because you may not have enough risk to be able to take that trade. Now, let's say, for example, you're trading a prop firm account, you're on a $50,000 account, you've got $2,000 or $2,500 worth of drawdown, okay? Because that's the pretty industry standard. The first particular setup that we get here at 6:35 in the morning Pacific Standard Time, this candle is from 946, right? 14,946. Your risk would be all the way down here at 14,907. So this is close to a 40-point risk right off the bat. Now, remember, you may want to take this trade, but it's putting up 40 plus points to the downside. Not the smartest thing to do. The only possible way that you could probably take this trade is if you were trading 1 or 2 micro contracts, allowing maybe an $80 to $160 risk on that particular trade. Now, if you would have taken this particular trade, you would have been stopped out for full potential loss. So either 80 or 160 if you're playing 1 or 2 micros, which is what I would definitely recommend. God forbid you're trading mini contracts in multiple at that, you would have a blown funded account or evaluation on the first trade of the day that you took. So again, this is why I say you need to manage your risk accordingly, become a phenomenal risk manager, and understand that not every trade you can take. Now, for me personally, I would like to see something on the risk side, maybe around 30 points, 25 points, 20 points would be great. 35 is kind of pushing it for me, but I will take those trades. 40 plus points, I probably am going to let those go 9 out of 10 times. Again, unless I'm super cushioned on my account for the week and it's just, I'm taking one micro contract and I'm going to just try to scalp some profits. Again, the next trade setup that you get, your risk tolerance would have been 14,936. Your entry would have been all the way down here at 14,901. So we're giving up about 35 points worth of risk. Again, a little bit less than this first initial candlestick here because we're closer to 40 here. Now, again, you may be thinking, well, on one micro contract, it's only an extra $10. True. However, I have a couple of things going against me that I don't like to do off the open. That's take trades within the first 5, 10, even 15 minutes of the market. That's just something that I've built into my trading plan over the years that I've been trading, just due to the fact that the volatility swings from high to low are just too large. And normally those big swings tend to be false breakouts. Now, again, is that to say that this trade was going to be a successful trade? Of course not. This trade could have done the same thing as well. I've seen the market trade sideways for 2 hours off the open. Nothing we can do in those particular situations. Now, if we look at this particular trade situation here, where we're giving up 35 points of risk here, this is going back to last Thursday. So I'm doing a little bit of back testing and really going through the strategy and working on my own edge as well. 35 points would be around a $70 loss. If I did take the full potential loss, I would be okay with taking that full potential loss on this trade on one micro contract. Yes, we do go into drawdown for about 15 minutes time here. Nothing to be concerned about. For one, we're still trading below the 20 SMA. Two, we've never gotten taken out over our 1 bar reason why stop. Now, if we look at the entry here below this low wick, you'd have seen that we would have been getting into this trade here at 705. So the amount of risk, the amount of drawdown that we would have been in wouldn't have been that much, just due to the fact of it, as soon as it broke down and flickered up a little bit, might not have been down at all, really. So if we look at the entry between 14,900 and this drops all the way down to 14,869, you can see that that's almost a 30-point gain. Now, again, that's to say that someone actually caught the bottom wick. That's never going to work out. So maybe you took 20 to 25 points. Now, you may be thinking to yourself, well, if I'm going to risk 30, 35 points, shouldn't I try to be targeting 30 to 35 points? The answer would be yes, if you're able to get those 30 to 35 points. Now, sometimes we don't know if we're going to get to that kind of extended move. What I like to do, instead of going for that like 1-to-1, if I'm trading one contract, what I like to do is let it go as long as possible until it starts to stall. And when it starts to stall and trickle back against me, I like to kind of take those profits. Now, if I'm trading two contracts, I will take some off a little bit earlier, maybe like a 0.75, 0.5 type of reward ratio on that, just for the safe factor of my win percentage going up a little bit more. Now, again, ideally speaking, anytime you set hard rules for yourself where you say, well, if I'm going to risk $75 on a trade, I want to make $75 on a trade. You can completely look at it that way. Again, in this particular scenario, you wouldn't have made the full return on your risk before getting stopped out. So there's one of two things that you can do. Either you can adjust that take profit to take it a little bit before you hit that 1R. That way you're kind of in the safety net of being profitable. But again, that doesn't mean get in and take 5 points, 10 points off this. You're going to need at least 20 to 25. I would recommend closer to the 25-point range. If you can't get around 25 points out of the NASDAQ, then I would say go ahead and go to full stop loss. Because in that particular case, you were going to lose anyways. And at this point in time, it's just a game of probabilities. So the next trade setup that we get here, you can see, is also an entry of around 14,936. And if I was to look at this drawdown here, all the way down to 14,895, again, on this particular play here, we're talking about a 40-point risk. I don't know how many people are comfortable with the 40-point risk. If you are comfortable with the 40-point risk, understand you're going to lose around $80 on this particular trade. Now, that kind of falls in line with what I like to trade with Again, even though this was also a 40-point risk, this is a little bit later in the day after we had a little bit of a pop, a little bit of a sell-off, and now we're starting to gain our feet under us. You have to kind of understand where you're at in the market cycle as well. I'm definitely not okay taking 40, 50, 60 points worth of risk right off the open. I will, however, again, because in trading, you have to be able to adapt and you have to be able to be like a chameleon, right? You have to be able to have a little bit of finesse. This takes a little bit of skill. Now, if you're going to take this trade, you have to understand that you need to get at least 25, 35 points, if not 40 points off this trade to make it a good trade. If not, you need to stop out at full stop loss. I'm hoping you guys are still sticking with me on this. You would have entered here, but I also want to point out something that you would have had another setup here as well with a little bit of a smaller risk. So again, if you are following a strategy where you're going to be a great risk manager, then maybe you analyze, okay? Maybe you analyze this particular trade and you tell yourself, you know what? That's a little bit too much of risk. I don't care if this trade goes 100 points in my favor. I'm not going to put on 40 points worth of risk. I need something a little bit smaller. In this particular case here, from a price of 14,940 down to a price of 14,911, you're only giving up around a 29-point risk. So this trade would definitely meet all of my risk factors as far as me wanting to take the trade at a 29-point risk. And if I look at this price action where it goes from 14,940 all the way up to a high print of 14,972, you would see that you were going to risk 29 points, but you would have also made 25, 28, 29 points, even 30 at a very high threshold here on this wick. Again, you could have also held this trade and made much more, but I'm just talking about on the first leg. This was an easy one-to-one trade here if you would have gotten in risking around 29, 28, 30 points and looking to take 26, 27, 28, 29, 30 points. That's what takes a little bit of finesse. So if you are a person or a trader who wants to, let's say, set hard stops and set hard limit orders for take profits, this is what I would do. I would set a hard stop loss underneath your reason why. Okay? A hard stop loss underneath your reason why. So if we get any candle close below that, it's a hard stop loss. You exit the trade as fast as possible. On this particular situation, when you get into the trade, I want you to analyze how many points are you giving up. In this particular case, it's 30 points, 29, 30 points. In this particular case, I would maybe set a profit take at around 20, 22, 23 points. Because if I'm going to risk 30 points, I'll just round up. If I'm going to risk 30 points, I'm going to look to take 30 points, but I want to make sure that I get a winner out of it. So if we're going to trade one contract, let's make sure we get that win. Let's maybe set a take profit at 25 points. If we're going to risk 40 points, let's set a take profit at around 33 to 35 points. Do you see how these type of things you can do to build your trading plan? Again, everyone's different. The only thing that is clear is that our stop loss remains the same. We do not get away from losing that one bar. We do not get away from losing the one bar. Now we can decide not to take this trade because, again, acting as a great risk manager, we can choose to let that trade go and wait for the next setup. That prevents a little bit better of a risk factor for us as a risk manager. Now, again, this trade here, although it's 30 points or so, let me get the right drawing tool out. Although this one is about 35 points worth of drawdown here, maybe let's set our take profit at 25 or 30 points, right? And if we don't get hit, then we don't get hit. There's no harm, there's no foul, we just get stopped out. But again, as you go along and as you start taking trades, you will see that if you're going to risk 25 points on a trade, maybe it's smart to take 20. If you're going to risk 40 points on a trade, maybe it's smart to take 30 or 35. If you're going to risk 35 points on a particular trade, maybe it's a little bit smart to take 28, 30, 32. So if you want to set that hard take profit, do it that way. Don't cut yourself short. Don't risk 40 points to take 5. Don't risk 25 points to take 7. Make sure it's compatible. Make sure it's comparable, right? Make sure it's in the nest egg, but just don't cut yourself all the way short. What we're trying to do here as a risk manager is we're trying to build up our wins and losses to average around the same. So when we take a winning trade, our losing trades are around the same amount. And when we take a losing trade, our winners are around the same amount. So what that means is essentially we only need to break the profitability factor over 50%, 55, 60, 65%, because sometimes you get a hot market and you might be hitting at a 60, 70, 80% hit rate, right? So again, you can be profitable using this type of model, but you have to be a fantastic risk manager. And many of you are not a trader, you're a gambler. Many of you are not practicing being a risk manager, you're just a degenerate. You're just desperate to make money. I hope this video makes sense. If you guys want to join me and you want to trade with me each and every single day live, and you want to get access to the mentorship and the community, and you want to get access to my courses and access to my calendar where you can schedule one-on-one coaching calls, I have one spot left before I double the price and increase it. The only reason why I'm doubling the price is because I want to work with serious people. And the more money someone pays to be a part of the Evolution Traders mentorship and community, the more I know that they are going to be successful and profitable. So if you want to take that last opportunity to get in at the fixed rate that we currently stand at, that link is down in the description box below, and I'll see all of you guys on the next one.